Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast. My name's Scott Jennison, the Acquisitions Manager here at Streamline Property Buyers. And from beautiful, sunny Brisbane, we have Market Update.
Yes, welcome back, everybody. It's Melinda Jennison here, Managing Director at Streamline Property Buyers. And we always enjoy producing these episodes because it allows me to get into the data and really unpack what's actually happening here in Brisbane. And I've also got a little bit of a comparison in terms of how we're tracking in relation to other capital cities around Australia today, because I have done a presentation over the last month at a national level for PICA, Property Investment Council of Australia, where I was able to collate data at a national level, and this enables us to see how Brisbane's tracking and compare that to other locations. So hopefully we'll be able to dive into that a little bit today as well.
I'm sure our listeners will be very interested in that because we do get people wondering what's happening around Australia, and not just obviously Brisbane where we specialise. But Brisbane has obviously been pretty positive again.
Yes, we've now had 12 consecutive months of positive price growth in Brisbane in both sectors of the market, that is the house market and the unit market here in Brisbane. And in fact, when we look at that 12-month performance, houses are up 15.7% over 12 months and units are up 14.8% at a median value level. That is very strong growth. And in fact, when we're working with property investors and we're projecting for, what growth might look like in the future, we start with very basic numbers of around 5% per annum, knowing that that is likely to be an underperforming capital growth projection. But of course, when we're projecting, we don't want to, over hit the mark and people then would think that they're going to, be in a stronger wealth position in the future. But when we're projecting 5% per annum and yet performance is 15% or 14.8% over that 12-month period, you can really see how projections are only accurate at the time that they're actually printed or at the time that they're presented, because real market performance can vary considerably based on what we might project could happen in the future. So, I think it's a reason why I often say, as a qualified property investment advisor, when you are planning out a portfolio, it's very difficult to plan that portfolio out right from the outset, because if you're not conducting an annual review to reflect upon projected performance versus actual performance, you may be missing out on the opportunity to purchase the next property when you can afford to do so, rather than waiting for a time frame to pass based on a projection. So just a tip for those that are in the market as property investors, it's so important that you're managing that portfolio actively through annual reviews. And of course, it's something that we always teach our clients and help our clients to understand when they come to us for property investment advice.
And there was a lot of projections, obviously, in the last couple of years that people looked at, probably laughed at a little bit, questioned. Some people probably listened, unfortunately. But Brisbane was only second to Perth in terms of market growth, performance-wise. The other thing to think about, and I remember we went to a breakfast a little while ago, a business breakfast, and they were talking about different areas. And when they talked about Queensland compared to Western Australia, for example, yes, there's the mining and there's those areas of growth on that type of thing. There's the tourism side of it. But then, you have to look at all the combination of those, and proximity, obviously on the East Coast, Brisbane is, Olympic Games coming. So there's a lot of positive side of things still in the future, I think. But, when you look at what has happened, it's been very, very positive for Brisbane in the market.
Yeah, so when we're looking at Brisbane in terms of how it is performing in relation to the national average, that is the national median price movement, Brisbane continues to outperform that national average for growth on an annual basis, a quarterly basis, that's a 3-month period, and also on a monthly basis. And that's just representation of the underlying fundamentals that exist here in Brisbane. And Scott, you pointed out that Brisbane's growth in the last 12 months has been second behind Perth. Interestingly, I've been looking at some information from industry colleagues that has supported the fact that the growth in Brisbane has been driven by a lot of interstate migration, and a lot of those people moving into Brisbane and Southeast Queensland as a whole are coming in and buying homes. So they're relocating, and the home buyers are those that are driving the market. However, there's been some evidence that's now showing that in Perth, a lot of the price movement is from property investors. We can see that coming through in terms of some of that lending data, and we can assume that there's more money going into Perth from those buyers that are investing in that market, and it's not necessarily being driven by the owner-occupier market. And something that I heard just recently was the fact that in Tasmania, when it had its boom in recent years, a lot of that boom in prices was caused by investors moving into that market, not home buyers. And of course, that's not been sustainable. And in fact, when we look at Tasmania, the growth in the Tasmanian market, certainly in Hobart as the capital city, has been completely underperforming compared to that national average in the most recent months, and certainly the last couple of years. So it's really interesting for people to understand at a national level what's happening in which markets and why, who's driving those markets, because that can give you an indication of whether that growth is sustainable and it's going to exist long term, or whether it might be a short peak based on, some fundamentals that, people are a certain population group, for example, investors are buying into a certain market for quick gains. Is that sustainable? And that's some comments that we've been discussing in the industry as experts that understand property fundamentals.
It sounds like you know what you're talking about, because I just have a look at I looked at in front of some of the notes we've got here in Hobart last month, February. Obviously, what we're talking about now is the only capital that was in negative compared to the rest. So.
And we look at the 12-month performance of Hobart, and that's also in negative growth territory compared to the likes of Brisbane, where we've had, in excess of 15% growth across all dwellings. So, yeah, really interesting that, despite broader macroeconomic conditions where interest rates are the same regardless of where you buy across Australia, the ability to borrow money is the same regardless of where you buy across Australia. Inflationary pressures, those sorts of things are very similar regardless of location, but you must consider local demand and supply metrics, who lives there, who's buying there, who's contributing to that demand, because ultimately that can influence the direction of a market.
And part of the reason that it's continued that upward pressure is obviously due to low listing numbers. And obviously compared to long-term averages, we're still down. Brisbane buyers have about 40% fewer properties that are listed online and available for sale to choose from compared to the long-term average as well.
That's absolutely right. So anyone that understands the fundamentals knows that when listing volumes are low, that means supply is suppressed. There's fewer properties available to choose from. And you're right, it's hovering anywhere between 30 and 40% month to month below the long-term listing average. So at the moment, we're around 17,000 listings per month. Historically, that's been up around 30,000 listings per month when we look at all of Greater Brisbane. So that's a huge reduction, and we've seen that retraction in the number of options available since the post-COVID boom. When we look to the total listings now compared to just 12 months ago, only 1 year, we're also down. So in February, according to SQM research, those total listings are down 15.7% year on year. So again, supply is shrinking. Fewer people are selling. We're certainly not seeing that forced selling that was talked about throughout a lot of 2022 as interest rates were rising in the early months of last year even. That's just simply not happening. And in fact, sellers are sitting on properties and not releasing them to the market, and that's why we've got such tight listings.
We did see a bit of a change, and it's interesting that the data obviously shows this as well, but this is what we did see on the ground a little bit is February, there was more properties seemed to come about. So as a positive note, I guess, for people, new listings were 7.6 higher through February compared to the same time last year, and it was an increase compared to January.
Yeah, so the increase in the number of listings in February compared to January is not a surprise, because most sellers will hold off listing in January and bring those properties to the market in February once people are, back into the school term, once people are back into the work routine, etc. So there was about a 33% increase in new listings between January and February, which is not a surprise to us. However, in February this year compared to February last year, buyers still had a little bit more choice, 7.6% increase in listings this year that were new and available to the market compared to this time last year. So you'll recall total listings, that's the number of properties as a whole available to the market, that retracted just under 16% year on year. But the new options, those that were newly listed, less than 30 days old, there were more options for buyers in that space. So generally buyers are more interested in new listings. So that's an optimistic outlook for buyers. Whether that's sustainable and whether that continues, obviously time will tell. But it was a great relief to see a few more options available for buyers.
Auctions. So obviously the data, we get all this data from Apollo Auctions. Auction clearance rates, 65.85% in Brisbane, with an average of 4 registered bidders per auction, which is a big jump from January, which was an average of 2.9.
Yeah, remember the January data was based off just one weekend, that last weekend in January. So we didn't get a good average because fewer auctions take place across the month of January. However, an increase from 2.9 registered bidders per auction to 4 registered bidders just shows that growing demand. We'll get a better representation as to whether that's sustainable when we look at March figures, but that's actually indicative of the fact that after every auction, 3 buyers walk away looking for something similar because they were not successful at that purchase. So that pent-up demand continues to build, and that's what's putting that upward pressure on prices.
An interesting one on that one, what we actually witness and what we experience on the ground. Melinda was at an auction last week. Now, apart from houses, which is generally probably the trend of what people will auction, but we're starting to see a few units and townhouses hit that auction market as well.
Yes, and aren't we seeing some competitive bidding in this market segment? We'll talk a little bit more about, that unit and townhouse segment of the market throughout this podcast. But gee, there's a lot of buyer demand in that segment of the market. And I will say also that we are seeing a lot of parents help their children to get into the market. So we're seeing a lot of mums and or dads bidding on behalf of sons or daughters, getting them into that more affordable segment of the market. And potentially they're also supporting these people financially through some assistance with building that deposit, some equity contribution or whatever the case may be. And so there's a vested interest for them to help their children get into the market. But we've seen some very competitive auctions that we've been involved in, and also auctions that we've observed where we're seeing that older demographic working in conjunction with the younger cohort of first home buyers getting into the market. And we're seeing some of that equity or that contribution from older family members come into that younger generation. And a lot of that is pushing this market growth, especially in the unit and townhouse segment of the market. It's something we're seeing often. Yeah,
we do get out and about on weekends, our team, and we spread out over Brisbane, and we attend auctions as well, and observe and take numbers and see how many people are registering, how many people are bidding. So we also keep our own in-house data on this side of things. It's a very competitive market, and obviously that's something we do help our clients with. When we go and register and try to get that advantage for them to get into the market at auctions as well. If we move on to dwelling values. So we've seen an increase in dwelling values of 0.9% in Brisbane through February.
We have, and for the first time in history, the median value of a dwelling in Greater Brisbane has surpassed the $800,000 mark. This is the first time ever. So the median value of a dwelling in Greater Brisbane is now $805,593. That's up $8,775 compared to last month. And that's also an increase of $26,233 compared to just 3 months ago. Remember, dwelling values do include both houses and units combined. So just important to note that, because there's going to be some trends that we discuss at a national level that may be a surprise to some in terms of which capital cities are ranking in which order. But I will say that the quarterly rate of change in dwelling values has been progressively slowing month on month. So although we are still in positive price growth territory, that rate of growth is starting to slow or continuing to slow month on month. So we're not going to see as much price escalation each month as we have been seeing in recent months.
And what sections of the market? So obviously that change at 0.9%, and as you said, we've over the $800,000 mark. Greater Brisbane too. I might just reiterate that as well. The segments of the market's always an interesting one to talk about. What is moving?
Well, look, I think when we look at price segmentation in Brisbane, it is clear based on the data that's presented by CoreLogic that the price deceleration is happening at a faster rate amongst the more expensive properties throughout Greater Brisbane. So when we're looking at that quarterly change, the 3 months up to the end of January, the top end of the market saw 2.8% growth. And in the 3 months to February, so taking in that additional month of data, we've got 2.3% growth at the top end. That's the top 25% of property values. When we look at the bottom 25% of property dwellings, remember this is dwellings, not houses or units separated. It is combined data, but that the bottom part of the market, the quarterly growth rate up to the end of January was 4%. In the bottom 25% of property values. And now that's retracted to 3.8% in the 3 months up to the end of February. So this is a consistent trend we're seeing across all markets, all capital city markets throughout Australia. It is the top end of the market that's now leading the slowdown in the rate of growth. It is the bottom end of the market that's continuing to outperform both the middle and the top end. But I will say, and I will continue to reiterate, that in Brisbane, because we're seeing such strength in that unit segment of the market, most of the units will be captured in the bottom 25% of property value. So it can be a little bit skewed when it is dwellings data, but that's something to keep in mind. You can't automatically assume that the cheapest houses are outperforming when the unit part of the market is going to be grouped in with that data as well.
Yeah, and I think that's as you touched on that affordability side of it. We talk about the unit side of the market and having that all in together. Obviously, that affordability is in that bottom section, that lower 25%.
Absolutely. I will also say that for the last 2 months, the CoreLogic data has showed that Brisbane median values are now higher than Melbourne median values. PropTrack information this month showed that the Brisbane median dwelling value is the same as the Melbourne median dwelling value. So this is coming across in the media, and the way it's portrayed is that it's actually more expensive to buy property in Brisbane than it is in Melbourne. That is not the case. And when we're looking at the median house value and the median unit value here in Brisbane, it is still cheaper to buy a house in Brisbane compared to Melbourne, and it is still cheaper to buy a unit in Brisbane compared to Melbourne. The fact that the dwellings data is showing the opposite trend, it is based on the volume of units that sell in Melbourne compared to the volume of units that sell in Brisbane. The composition of what makes up that median dwellings value is very different between the two capital city markets. This is where an understanding of what makes the data, what we're talking to the data, understanding that data and interpreting that data can really make a big difference in the decisions that you might be making as a property investor. So median values for houses and units in Brisbane still cheaper than the median values in Melbourne, although I will say that the gap between those values is getting closer month to month because Brisbane has continued to experience strong price growth at a time when Melbourne's market has been fairly flat.
And PropTrack data on dwellings, touch on that, is an increase there of 0.54% to a median value of $797,000.
So showing the same trend as the CoreLogic data as confirmed there. So basically, despite the two data houses reporting the same information, that the actual growth rates do vary depending on how they're capturing that data, but both showing positive price growth on a monthly, quarterly and annual basis. And in fact, PropTrack also confirming that Brisbane is outperforming the national average monthly, quarterly and annually, which is the same as the CoreLogic data is showing.
House prices. So house prices in Brisbane have increased last month in February, 0.9%.
Yeah, so that's down slightly from the end of January when price growth was at 1%. I will say over the last 3 months, house prices have grown 2.8%. And that confirms now that the rate of growth is slowing, because at the end of January, the quarterly rate of growth was 3.2%. And at the end of December, the quarterly growth rate was 3.8%. So you can see that it's just progressively slowing, even though the growth is still positive. Right now, though, just under 900,000, the median value for a house in Greater Brisbane sitting at $899,474. So applying that 0.9% growth to that median value, that's $10,846 more than last month. And looking at the quarterly rate of change, it's $28,948 more than just 3 months ago. These are big price shifts. And if you are a buyer in the market and you are looking to be negotiating with a seller, or wondering whether to spend an extra $5,000 with your offer, you can see here $5,000 at the median dwelling value is the equivalent of 2 weeks market growth. So it's so important for buyers to understand what's happening in terms of price growth to determine, whether it is actually worth stretching to purchase a property that might be the perfect property for you, whether that's an investment or a home. Because if you are waiting for the next property to become available and there's a 4-week transition period, that's going to potentially cost you more than stretching to secure the property now if the rate of growth continues.
And the PropTrack data for houses, an increase there of 0.56% to a median value of $892,000.
Yeah, same trend. So PropTrack, again, confirming in the house segment of the market, Brisbane is outperforming the national average on a monthly, quarterly and an annual basis. So Brisbane has been an outperforming capital city there.
The unit market. So over into the median unit market, obviously the increase there in February, we've seen an increase of 1% to a median value of $576,359.
Interestingly, this unit market in Brisbane continues to surprise me because of the strength that is coming through. We've talked about what we're seeing on the ground at some of the auctions, but also just turning up to open homes for units. Yeah. It's a lineup to get in and it's bumper to bumper. I will say in the housing market, we've seen that quarterly growth rate decline from the end of December to the end of January and now through to the end of February. In the unit market, we're actually seeing the opposite trend. So up to the end of February, we've seen a reacceleration in terms of median price growth. So we've seen a 3.6% increase in median values in the unit market over the last quarter. This was trending at 3.2% at the end of January. So we've seen an increase in that rate of growth again in the unit market. So while the housing market is slowing down in the rate of growth, the unit market seems to be reaccelerating in terms of the rate of growth. And that's sort of consistent with what we're seeing on the ground in terms of that on-the-ground demand pushing prices up.
So when you throw the numbers on that, as we talk about the percentage, the median value for Greater Brisbane for units from last month is an increase of $7,764. And for 3 months, $24,027.
Yeah, that's a big shift. If you got a budget of $570,000 for a unit and you're waiting 3 months to get into the market, you've got to pay an extra $25,000 almost to buy the same product 3 months from today. So that's an extraordinary rate of growth, and it's important for buyers to understand that. And perhaps that's why we're seeing those buyers that are stretching to get into the market. But of course, that continues to push the market values up as well. There's got to be a point at which it slows down, but we're not seeing that on the ground likely to happen anytime soon.
And the PropTrack data, an increase in 0.4% to a median value of $593,000.
That's right. It's showing the same positive price growth trend as the CoreLogic data there. So looking at the rental market in Brisbane, obviously rental conditions across the property market here in Brisbane continue to remain very tight. We've got vacancy rates reducing from 1.2% in December. They were down to 1% in January, and that's further declined again. February was sitting at 0.9%. It's not unusual. There's always a seasonal increase in that vacancy rate because a lot of the tenancy agreements are aligned to to finish at the end of a year, either in December or January. It's the peak letting season. So generally we see more properties advertised and available for rent. It doesn't mean to say those properties are vacant, but there's an increase in the number of listings available online, and that can influence the vacancy rate number in the way that's calculated. So very tight vacancy. Of course, when we're looking at some of the locations throughout Brisbane where vacancy is tighter than others, 0.9%, as I said, across all of Greater Brisbane. But looking at Beenleigh, in February, it's sitting at 0.8%. That's slightly higher than in January when it was 0.7%. The CBD, last month, you might recall, we talked about a small spike over the Christmas period. A lot of those international students that occupy properties in the CBD, perhaps relocating back home for that Christmas period. So we've seen a recovery in vacancy rates. It was 1.8% in January. It's now dropped to 1.6% in February. So a decline of 0.2% month on month. In East Brisbane, no change, 0.9%. So really tight vacancy there. Inner Brisbane sitting at 1.2%. It was 1.3%, so a little tighter than last month. Ipswich sitting at 0.7%. That was 0.9%. So not many properties available for sale in the Ipswich region, not for sale, for rent. Thank you. In Northern Brisbane, 0.7%. That's no change from last month. It's one of the tightest, or one of the most tightly held areas for properties available for rent. And you'll recall on a recent podcast, we talked about the areas that have seen the greatest uplift in rents, and it has been those inner northern suburbs of Brisbane over the last 12 months. Southeast Brisbane, 0.8% current vacancy. That's decreased from 0.9% 1 month prior. Southern Brisbane sitting at 1%. That was 0.9%, so a small increase there. And West Brisbane sitting at 1%. That was 1.1%. So not much movement across the board. Vacancy is still very tight across most areas of Greater Brisbane.
So not much movement on that side of things, but there's definitely movement on house rents, where we've seen an increase of 7.5% in Brisbane over the last 12 months, slightly up in January. We're
slightly up from January.
From January, yes, where house rents were 6.8% over the same period.
That's right. So what this means is that we've seen a re-acceleration in the rental price increase when we're assessing that over a 12-month period. In the housing market, Brisbane is actually below the national average in terms of rental price growth. Whereas when we look at the unit market, Brisbane is well above the national average, because we look at units, and in the last 12 months, Brisbane units have increased 12.3% in their rent. So it's interesting because, you know, when we look historically at the performance of the unit market and the housing market here in Brisbane, the housing market typically has generally outperformed the unit market, but we've seen a shift and a turnaround in the last couple of years off the back of COVID. And for those that are long-term podcast listeners, you would have heard us start to talk about the on-the-ground demand we were starting to see in that unit market. That was more than 2 years ago now. And in the last 12 months, we've seen capital growth in both segments of the market, very, very similar between houses and units. And yet we've seen rental price growth significantly higher in the unit segment of the market compared to the house segment of the market. So the total return on investment has been superior for those holding units in Brisbane compared to those holding houses over the last 12 months, which is an interesting observation and something that property investors, perhaps should be aware of, because most people think when you purchase an asset in Brisbane, you must go for a house and land. But actually, when you're looking at the fundamentals in terms of where and what to buy, that may not be the best strategy for you depending on what you're trying to achieve. And that's why getting expert advice from local specialists can help you understand supply and demand metrics and fundamentals at a local level, depending on the market that you're looking in.
So if we look at the gross yields then, they've eased slightly, 3.6% for Brisbane houses, down slightly from 3.7% last month, and 5.1% for units, which is unchanged from last month.
Yeah, so definitely the income as a proportion of the purchase price is going to be a lot higher for units compared to houses. That's not unusual, and that's representative of most markets around the country.
I think in summary there as well, when we're talking about the unit market, I mean, yes, it's performing. Yes, look, the rents are increasing, the prices are going up. It's a very, very competitive market. So that's something for people to be aware of. It is a very competitive market, and there's a lot of competition out in there in that space as well.
I will say, and perhaps just for some clarity, there's units and then there's units. So when we talk about units, typically the types of units that we would be looking at would be units in small complexes that are in locations close to the CBD. We don't actually spend a lot of time looking at inner city units in high density complexes. So be aware that when we talk about units, we're obviously talking about data for all units across the board. But what we're observing when we talk about lineups to get in, generally that's going to apply to the smaller complexes where there's a scarcity of the product type. When you're moving into high density and you've got a number of units for sale in the same complex, you lose that scarcity, so you may not have that same level of demand. So I just wanted to clarify that so that people don't assume that all units are created equally like houses. Not all houses are created equally. It depends on where you are looking and, you know, what the scarcity of that supply might be in that location. It's something that buyers need to be aware of.
So in summary?
Look, I think that there's a lot of frustration and confusion out there in the Brisbane market. You know, I know through our own inquiry, a lot of buyers are just fed up. They're exhausted. They're wanting some professional guidance because, let's face it, nothing's listed with a price in Brisbane. So if you're not in the market, immersed in the market to understand what has recently sold, you just might miss, you know, the mark in terms of what your budget will buy. A lot of the time, our job as buyers agents is to educate buyers on what their budget will buy, because a lot of buyers have a big, discrepancy between what they think they can afford and what the market will actually deliver for them that's going to be aligned with their budget. So, you know, getting clarity in terms of what you can buy is going to be an important first step if you are looking to get into the market as an owner-occupier or as an investor here in Brisbane. Because there's a lot of buyer fatigue out there. I'm not going to lie. There's a lot of people that are missing out on properties. There's a lot of people that go to auctions. You know, we've seen tears from people that haven't secured their property at auction. They feel completely deflated at the end of that process. But we've equally seen a lot of buyers miss out under multiple offer scenarios for good quality properties. So it's not unusual for there to be more than one offer on a property, and therefore every buyer that misses out becomes a little bit hungrier next time they find a suitable property, and they might stretch out a little bit more. And that's that price pressure. That's why we're seeing that upward pressure on prices. But I'll also say that we're seeing some more caution, especially in the upper end of the market. We're seeing some more buyers make more considered decisions instead of making those decisions based on the fear of missing out. Perhaps the seller's expectations are still shifting at a more rapid pace than the buyer's expectations around value. So therefore, we are seeing some of those higher end properties pass in at auction, and potentially that could be because not everyone can bid unconditionally for a higher value properties, and people might need finance clauses to pay more to protect them in the event that a valuation doesn't stack up. So there's lots of nuances within the market. Obviously, that's why our service exists, to help people and guide them through a lot of those nuances.
Yeah, and I still think, look, there's obviously high demand. There's low supply. We've helped some clients buy recently, and they're stoked. They're very, very happy. They've got into the market and bought great properties as well. So there's lots of information coming out in Brisbane. Obviously, we talk about the Olympics a bit. They're revising all of the Olympic structure at the moment and where the facilities are going to be in stadiums, that type of thing. So we'll keep you updated on all that information when it all does come out. Hopefully that will be out very soon. It's very exciting news for Brizzy. But that has been another market update. So I will let Melinda wrap it up as we normally do. Thank you very much for listening. Hopefully that's been great information. As we normally do, tap us on the shoulder if you see us out and about, say hello. It's always good to talk to people that listen to the podcast, and we do appreciate everyone enjoying the information that we do share. So I'll let Melinda wrap it up from me. Thanks very much for listening, and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. As always, if you have enjoyed this episode, please let your friends and family know that the podcast exists. Hit the subscribe button, whether you're watching this on YouTube or on your favorite podcast player. And we would love for you to leave us a review so that other people can also benefit from the information that we share. Until next week, we hope you have a good one. We will speak to you again then. Bye for now.